Expert opinions on Tesla stock differ. Some think the company's stock is still too high despite the decline. However, did you know that a renowned investor thinks that the stock is a buy right now? You wouldn't want to miss this information. A few weeks ago, renowned investor George Soros tripled his Tesla investment despite concerns about Musk's recent takeover of Twitter. While some claim that Tesla is trading at a very low price, Soros has been buying up shares. The renowned hedge fund tycoon George Soros, the creator of Soros Fund Management LLC, handled client money in New York from 1969 until 2011. One of the most prominent philanthropists in the world, George Soros has donated more than $32 billion of his personal fortune to open society foundations, which support people and groups fighting for freedom of expression, of questioning responsible government, and societies that advance justice and equality worldwide. In the first quarter of 2018. Given that Tesla is a major backer of Under Pressure, George Soros' investment firm purchased a significant amount of Tesla bonds. According to a Securities and Exchange Commission filing, Soros Fund Management purchased $35 million worth of convertible notes at the time, which are bonds that can be converted into a specific number of common shares. Known for his commitment to fund businesses that emit no emissions, George Soros began making active investments in electric vehicle firms this August, although most investors panicked when George Soros sold his 1.26 million shares at General Motors earlier this year. Many institutional investors bought up Tesla shares during the decline. Although Tesla CEO Elon Musk may appear distracted by Twitter for the time being, and Tesla stock may have taken a beating this year, legendary investor George Soros appears to be largely unaffected based on a regulatory filing. George Soros increased his investments in several tech stocks, according to an SEC filing. The Soros Fund Management opened a new position in Tesla with a total of 2,883 shares worth over $20 million. Soros has tripled his investment in Tesla over the last few months by taking advantage of the company's decline this year. According to a Form 13F filing, Soros' stake in Tesla was disclosed in the second quarter, indicating that he began purchasing shares of the electric vehicle maker between April 1st and June 30th, at which point he held 2,983 shares. As of right now, Soros owns 8,947 Tesla shares through his firm Soros Fund Management SFM. At the time of the market close, the stake was valued at around $16.4 million or 183.20 cents per share. Soros' investment in Tesla is an indication of his support for Musk's plan, particularly because he believes the techno king will once more make Tesla his top priority, while CEO Elon Musk's continued diversion into Twitter will probably expose investors to additional risks. Morgan Stanley analyst Adam Jonas stated that the company is still on pace to grow sales by about 37% next year, generate $15 billion in free cash flow, and solidify its position as the leading electric vehicle player in the world. We think that Tesla's completion gap may get bigger, especially when EV costs shift from inflationary to deflationary. According to Jonas, Tesla is by far the best positioned OEM in terms of prospective eligibility for consumer tax and production credits with regard to the Inflation Reduction legislation. Even well-known investor Cathie Wood has amassed a substantial holding of Tesla shares. In October alone, Wood's ARK Invest purchased Tesla equities twice. Additionally, she added 190 Tesla shares in the middle of the month to her initial purchase of over 132,000 shares. When Tesla released its delivery and production figures through a press release in early October, ARK Investments made its first purchase of the month. Later in mid-November, after the stock dropped in response to Tesla's Q3 report, it made another acquisition. The company's three funds saw a buying opportunity in the automaker's recent decline on Wall Street. ARK Investment loaded up on Tesla shares in its innovation, next-generation internet and autonomous technology and robots ETFs. In the second week of November, the Innovation ETF purchased 27,594 shares, while the next-gen internet and autonomous tech and robots ETFs gained 2,909 shares and 9,173 shares, respectively. Wood, often referred to as a Tesla bull, thinks that most people will see a 10x increase in Tesla. Although Tesla's stock may appear expensive given its valuation, the firm has consistently generated enormous revenue and earnings growth, and its yearly earnings projections indicate that its growth trajectory is still very much intact. Although most analysts think that Tesla stock is better suited for long-term investors than for short-term investors, experts believe that the future for Tesla looks bright for investors looking years or decades down the road, considering the long-term bullish. Investors, countless firms are striving to achieve fully autonomous vehicles, but it will be challenging to overtake Tesla's lead given its current state of development. Tesla has been improving its use of cameras, radar, and GPS for years, to the point that its cars can now drive themselves almost entirely, in order to increase overall production. Tesla has invested billions of dollars in building two new manufacturing facilities in Texas and Germany, as well as modernizing its Shanghai plant. The China plant can currently produce 1.1 million vehicles annually at full capacity. In September, it closed on that run rate with a monthly record of 83,135 units. Additionally, the company has stated that demand for its energy division, which includes solar rooftop panels and battery storage, is greater than supply. Sales from this division accounted for 5% of total revenue in the third quarter. Experts believe investors have good reason to believe Tesla can further improve manufacturing efficiency in the future as Gigafactory production ramps up. Musk stated that fully autonomous software will eventually be Tesla's main source of profitability, as software companies typically have much higher margins than automakers. With that in mind, Tesla has a robotaxi scheduled for production in 2024. Additionally, the company is using a single-piece casting technique in Berlin and Austin that has reduced the number of welding robots by 70% per unit of capacity. This means the company is spending less time and money on welding because it is casting the front body and rear body of the Model Y as one piece of metal. Although Tesla's current price-to-earnings ratio seems expensive at first glance, investors may find the valuation more appealing when they take into account the company's strong momentum and management's optimistic outlook. Tesla's strong business performance during a challenging environment highlights the automaker's momentum and the powerful demand for fully electric vehicles. Despite challenges in its supply chain and logistics, Tesla is clearly doing well. Customers will take ownership of those vehicles in the fourth quarter. This issue could cause 2022 deliveries to miss the company's 50 annual growth target, but production is still expected to grow at that rate. The company produced 22,000 more vehicles in the third quarter than it was able to deliver due to shipping bottlenecks. Given the enormous expectations that investors have for the electric vehicle firm, Tesla's stock may continue to fluctuate. Risk-tolerant investors should give serious consideration to purchasing a small stake in Tesla, as the company has demonstrated its capacity for disruptive innovation on numerous occasions. However, experts advise against relying on any stock to ensure a specific return in a matter of months or even years, as there are too many variables, such as the risks associated with the current supply chain. Despite being best recognized for being a divisive leader, Elon Musk has also made bold forecasts. Deliveries of the Tesla semi-truck are scheduled to start next month, after it was initially introduced over 5 years ago. Even though there may be greater purchasing alternatives in the future, Tesla continues to keep its third place position in Zacks ranking, with its automotive domestic industry ranking in the top 27% of over 250 Zacks industries. In addition, Tesla is still trading at a significantly better price than it did previously. Moreover, the market for electric cars is still very tiny, but it still has a lot of room to develop. With earnings estimate revisions up from the previous quarter and the company still looking ready for growth, patient investors may benefit from keeping the stock at the average Zacks price target, indicating a 66% increase from current levels. It is well known that Tesla is incredibly volatile, but so are other stocks. In 2021, for example, when Tesla's stock was on the decline, and investors stated that since the stock had dropped, there was always a chance that it would rise again. Although Tesla's shares have now dropped nearly 50% from their peak, long-term investors may wish to take advantage of this decline and purchase some Tesla stock. Now, click the channel subscribe button